Check.
Good morning.
Good morning.
Morning-ish.
Grand Rising.
Morning, boss.
Okay. Before we do anything, let me just for openness sake, I have a sell limit at the high of the delivered here. Let me show the next screen. This. So remember yesterday when we had the my sell limit was just what? No, it didn't. It was almost triggered. 7. Interesting. So I'm still looking at this idea, but I'm not using the level here as that crutch anymore. I'm using this high. So I want to see this fractal print, but instead of it happening here, I'm looking for it to happen this here. So I have a sell limit set for this high, specifically because I expected to use the high of the week, as we discussed yesterday, based on the calendar, and expected that CPI pump. What I wasn't sure if CPI was going to take the low first or push up. So I didn't try to engage in the CPI delivery itself. Instead of trying to bite the sell limit, just left the sell limit and said, you know what? Let me not even pay attention. So as of right now, I think on my feed, the high of the day is set at 23,719. And my sell limit is set at 23,720. Can't make this up. Missed my limit by like literally 1 point. But let's see, it's still early. Now let's jump into the useful part of the call, the analysis portion. And then go make us some money. Let's go there. Okay. First things first, we grab 2 p.m. Monday. Choosing to ignore what's happening right now so I don't get sidetracked. There we go. And open price. And 720 coming in at there. So as we can see at 720, if we're trying to answer the two questions of whether or not this market is likely to retrace inside the range or expand out, first thing we would see is 2 p.m. is above the current high of the day, which means precedence, like in terms of what's it likely to reach for, would have been 2 p.m. since 2 p.m. was not hit. Trade it up, hit that, what's it called again? CPI, wherever the high is. I don't know if it's here. I think it's probably on the left. For completeness sake. There. For completeness sake, that's the old high from whatever day that was. There we go. So now we have yesterday doing quite a lot to the downside, reaching lower. I think it hit 2 p.m. was already hit. So right now, 2 p.m. price from Friday is my next draw on liquidity. So I'm likely going to be holding a decent portion of my entries up here. So yeah, let's jump into analysis. So right now we can see that the market has pushed through the high, clear big breakaway gap here, all-time highs hit. As we know, when there is a Impact news. We wait 2 minutes after. So 2 minutes would be here. So nothing surprising about it. That would have been where you anticipate buy entries to form, targeting the high of the all-time highs. And then this would be where you'd be looking for your PD arrays for shorts to be confirmed. Meaning, we do want all-time highs. We do want to see it hit that. But as it's breaking down, we're going to be looking at that high and specifically trying to see closures below it. Just gonna mute all just to be on the safe side. So yeah, nothing excited about this at the moment. Yes, my sell limit is triggered, but again, nothing over the top in terms of, oh my God, yes. Just still early. From the M4 perspective, we haven't stopped closing above green candles yet. So rules, processes dictate that I be open to the idea that the first run to a key level is traded through. First run. This missed by 1 point. So I'm not going to be a stickler for precision and say it must run this again. This was 1 point away on my feed, maybe a couple points away on this feed. So this is really the first failure swing towards the thing. Then it pulled back, then it swept it, or it swept it. I'm looking for the FEGs on the way up to give way. If this high gets swept again, I'm going to size in a bit more aggressively. If it continues to break down from here, then I'm fine with the level of risk I have on here. So now we want to see confirmation that the bearishness, the bullishness is done. Trading through, up candles lows, closing below, all that good stuff. I might be a little bit less on the side of pointing out like ways to get in here, particularly because when I started the call, I told you I put a sell limit because choose the high of the week, the logical level expected to be reached for. I'm not thinking about how to get in this market because that part of the equation would have already been done already. I will read as it prints. I will point out things that support the idea that we are getting low prices. If an entry fractal print that makes sense, I'll point to it. But I want you to understand I'm already in this short on my limit. So yeah, there we go. Okay. Like anything else, run to a key level on news, inefficient delivery. So we have 720. This delivery here is inefficient. So since we look at 720 as the start of a new delivery, a new week, here we have a classic example of purging of the previous week liquidity, just for simplicity, happening on a Monday, which is the start of the delivery. So understanding is going to triumph your desire to be precise here, which is why I use the limit instead of trying to read something to enter on. This is an instance where Monday is sweeping liquidity. Stats or statistics show that Mondays are not likely to create the high of the week or the low of the week, but the probabilities go up when Monday is sweeping liquidity. So if this is a purge, the good book says revert happens under 2 scenarios. Number 1 should be the easiest one. Monday's low. That's the easiest one. If Monday closes up here and Tuesday starts to trade lower, you're looking for Tuesday or whatever day comes after to go through Monday's low. That's what the good book says. Experience will show you that the most important thing here is going to be the open price of Monday. Why? Because if that open price get traded to and closed through in this, like let's say, what time is it? Like before equities open, up to or before equities open, then that would have essentially constituted everything you needed for lower prices. At that point in time, I'm going to humbly suggest that the drawn liquidity is going to be one of those 2 p.m.s from days ago. So likely Friday's 2 p.m. or Thursday, whichever one. I don't remember which one wasn't traded to. There. So when I look at the potential of this setup, like before it printed, when I was framing the idea in my mind yesterday and just thinking about it, I have enough reason here to leave at least one position running with size versus trying to get 20 points here. You see the at least one. The position that's in right here carries a great degree of probability that I will not manage it outside of stop loss, take profit, logical, partial level because of the potential it has on it. But anyways, let's take a look at M1 for a quick second just to see if I can see anything. There's no last push here. If you're a pattern trader, you'd look at this as a down candle before big move, and you'd be looking at this open price here for mitigation. I'm not saying that's wrong. I wouldn't say that's wrong. I'm just saying that this is more requiring something to print simply because you understand it, rather than this is carrying significance at this point. Things that are important here are likelihood that they want to run this high again, just on principle because of the feed differences as to when it was traded. So I'm open to that idea. Second thing is breaking down below this high. If none of that has taken place, then you have enough reasons to be patient. So with that being said, I am more on the patient side here. Most of what I want to see in terms of confirmation is below me. The only thing that's above me is the line here, and that small probability that it runs it again. Outside of that, I just want to see lower prices. Let's see what's in the chat. Thursday. Is Will saying Thursday, high of the week, is better? Is that what you're saying? Good Lord. Let me live. Why did you stop being on limit like that? I had a news. Okay, that's a fair question. My limit was set roughly about 721. Roughly about here. My limit was set. The stop on this is 30 points. I put 30 points there because it's not the biggest size. It's not my full position. It's decent, but it's not. Yeah. I'm putting a 30-point stop here because from a risk to reward standpoint, I stand to make a lot on that. 30 points was okay for me. I didn't put more and I didn't put less because, well, first, I didn't put more because the run to that level is already significant. So circuit breakers must kick in and say, hey, that's enough for a rally before the market's go into a frenzy. So slow down. And I didn't put less because if I put a limit here, at an all-time high. The expectation is that we're going to reach for that all-time high. I don't know if it's going to sweep it. ICT has convinced us that 40-point sweep is good enough. And if this is over 200 points, or I don't think it's 200, like very close to 200, that's bigger than 40. So I don't see a reason for it to be bigger than that. I didn't want it to be too tight, like a crazy person to get stopped out at the high of the week. So if I'm being honest, I'm open to a little risk on this, or a little bit of heat. Maybe not on the initial position. If the initial position gets stopped and it just got stopped, but I'm open to the idea that the delivery here might not be as smooth because everybody might be wanting to short. So you might get multiple stops, multiple runs. I'm open to the idea. I'm not expecting it. Just open to the idea to be realistic. I just want this to die. Oh, Thursday 2 p.m. Ah, yeah. Thanks, Will. Thanks, Will. I just want it to die. M4. M4 looking good in terms of setups. Entering here carries a great degree of risk. It goes without saying, like a greater degree of risk than my limit. The hours closing, the distance from the high, no big down candle, or the down candles here are not bigger than the green candles. So the risk on this to go short there is a little bit risky. So if you have the margin to withstand that retracement and you're up for that risk, go ahead. But I don't think it's the best idea here. But somebody is looking at it and thinking that should be fine. But you stop yourself tilting when you're on the wrong side of market, i.e. you want shorts, but they keep running your stops. Okay. So the first thing is always to control how many positions or how many trades I take. So if I enter the first trade and I get stopped, I'm always calculating, is this a full 20-point stop? Was it a reduced stop? And then I want to see, how was I stopped? Did it smash through the level, close above, and that's it? My confirmation for low prices clearly is not taken, or clearly is not given. Then, you're trading against your analysis. Your analysis didn't say go short, but you went short. That's against your analysis. There are times when the setup is rule-based, but not exactly process-based. And I'm open with myself about it. What I mean by that, let's say I see an order block forming, and because it's like a big reversal, I prefer a close below the open versus like a wick below the low. Let's say we close below 50% of the green candle body. Rules say if I'm correct, my entry is likely going to print above the open price of the next candle. In cases like that, I will try to sell above that candle open and be open to the idea that the CSD is not yet done, but because it's coming, my entry here is fine. If I get stopped out on something like that, I don't like beat myself about the idea itself being wrong. So let's say I went short here and I put my stop there because I'm trying to get in, and the rules say this should be fine. Let's say that stops me out. That's like a full 20 point or a little bit more. I want to see what happens here. Close above CSD, I look for another position. Multiple stops again, then I start looking for on the downside, where is the level that we need to close below to initiate some type of retracement and then lower, or we need to trade below to initiate the idea that we're likely going lower. So while I'm looking at this, my entry is decent, but I'm not thinking high of the day. Yes. I'm thinking, what does this need to trade through to strengthen the idea that I can hold this? I'm not trying to get 20 points. I'm not trying to get 20 points from this position. So I'm looking at what are the things that support the idea that much lower prices are coming. So to not stray from the question, the conditions under which I get stopped, how the candles look, what the delivery look, time of day, is going to lend to, I can take another position, or I can enter again and size up despite taking that initial loss, or sit down. Don't tilt, sit down. Regardless of the outcome, I like to stick to that process because it keeps me from making a bad decision on the next good setup or taking more losses on the next bad setup. Like, look at Friday. Friday, I was convinced that we were going to go lower. I sized in and I took a loss. I didn't try to short the high of the day after that or anything like that. I just stepped away, owned up to the fact that it's not a loss because I don't know how to trade, or it's not a decent loss because I missed anything. It's a loss because I sized into the position. If it was a loss where I didn't size in, I'd feel nothing about that. I wouldn't even make an issue about it in my journal. But because I did what I did, I had to scold myself. But the nature of the losses dictate if going back in is a tilt or it's process based. So you have to study your losses. You have to look at, most of my losses come before this time, so I cut them out by not trading before this time. Most of my losses come because I'm giving it a 12-point stop and it's retracing 15 points. So my stop needs to be out about 15 points. Most of my stop is caught up right at the volatility event because I see a big spike and I'm trying to fade the big spike. So the spike does not end when I enter. It just lasts a little bit more and then I get squeezed out. You have to be clear on those things so you don't hesitate. That's the bad thing is hesitating. I think I was just talking to somebody this morning and they were asking me, after going through all the things I've gone through, wins, losses, psychology, what changed for me? And that's exactly what I said. I no longer hesitate. He asked me, why do you think you used to hesitate? And I said, because I used to fear drawdown. I used to fear entering a position like this and it retraced. I cut right here. And then it snaps there, and I'm like, I need something else to enter. It takes a couple of those before you start realizing close proximity entry is still as good as a precise entry. But yeah, those are things that logical conclusions you come to by analyzing yourself.
Yeah, definitely.
Yeah, what he said.
Good morning, Kish.
Morning.
Hey, I entered somewhere around here to the CSD on the M4.
Figured. That's what, see,
And
that's exactly what I was saying, guys. This is something that is rule based, entering above the open price of this candle. But yeah,
so I entered a little heavy. If you go on the M1, I have already trimmed
that's fine.
and I have runners. So should I have the runners on BE or
So
should
this is going to
So
be a very interesting question because here's the thing.
mm-hmm.
I don't think we have enough information from price yet to say that a BE is what we should be doing here. However, a BE protects us. So here's my humble suggestion. On the M4, if we close below this FEG, expect a retracement. Okay? Expect a retracement. If the retracement is being deeper than this candle's high, go break even and expect to lose.
This is
Expect to lose it.
that is if this current candle closes the FVG.
Well, Not necessarily, because this is the process I'm seeing. Okay, we've already got everything we need. Stayed up here, bam. Retracement here should be shallow if they're closing below this. So that means if you're in here and it closes below, you want shallow retracement, then it's gone. That's what it should look like here in clear bearish water. That's what it should look like. Either way, once price gets to this candle's height, I want to see some type of snapback. So I'm going to pull this black line out so we can examine it across different time frames. I want to see some type of snapback here. A perfect snapback, close below, then the next candle opens and trades right to the open of this, and then just dies. That's what perfection looks like. Either way, somebody who's short is going to love the idea of this breaking down. Experienced traders know that retracements happen, so it's anticipating where they can happen. Usually, when bullish support structures get broken, you either get immediate feedback or retracement. Last FEG, or not the last because this is there. This is a FEG. I'm looking for the next candle to open and then wick up. If it opens and it dies, then that lack of retracement will taunt me all day.
You know what my plan was? You hear me?
Wait, is that two different persons or one?
That's Mac.
Yeah, I know that's Mug. I could have sworn I heard somebody else. But maybe just me.
You hearing me?
I'm hearing you now. Loud and clear.
It's the gremlins. Now I was saying that my plan was that entry that Moan took. I wanted that entry there, but then I was waiting for that same thing that you just said. A close below, wick back, and then add to go short.
Yeah, makes sense. It makes sense. It makes sense. It makes sense.
Because of where we were, the all-time high, I'd rather be of a small position and it take me out more than go heavy at the top and then it comes back and I
Right.
can't take the short.
Right. So that's why again, you see exactly what he just said is the thought process I tried to avoid, and that's why I set a limit. The more you trade, the more you learn about how you trade. Full stop. So I know once if I'm watching this trade up here live, I'm just trying to find a CSD and justify an entry. Find a CSD, justify an entry. That's all I'm trying to do. But if I already have a plan that says choose the high of the week, and I already have like the most maximum level that I think it could retrace to, I should not be overthinking executing like that. So limits, forget about it. But yeah.
Another question just on the money side. I've almost, I mean, you must have also recovered the losses from Friday with the current trade now,
Right.
with two runners. So do I cut and sit, or
You've recovered all the losses from Friday?
yeah?
Okay.
So what do I do?
I love that question. I love that question so much, and this is why I'll tell you why I love that question. That question carries underlying psychological issues for all of us. That issue that we have where you give back after having the opportunity to make more. This is how I taught myself either into or out of that mindset. What would make you want to cut a short here? That's a question for everybody. Open question. You don't have to answer, just think about it for a second. If you framed where all-time highs is, all-time highs are, and it prints, the best thing you can do is be in a short that you're not worried about failing. That's the best thing you can do. If you're watching a bearish delivery that's already delivered, then there's absolutely no reason. When I say delivered, I mean retrace. There's no reason to overthink it. But if you're in a bearish delivery that is running and it has not retraced, stats have shown me I'm likely to overmanage those more. So as this is going lower, I'm going to M1 for this. As this is going lower, create
okay.
markers.
What I did, I had 5
Trail.
contracts on here, 5 contracts out at 20 here, right? And then 50 was here. I'm out. So I have 2 runners, one out here, and one more I'm just keeping it for the alt lows.
Okay, so I want you to keep one. If I want to keep just one, leave one.
Yeah, I'm keeping one now.
Right. So make sure your stop is inside. Your stop should not be higher than this candle's high. It doesn't matter where you enter. If your stop is above this, there's an element of risk involved there. There's an element of risk with it being exactly there as well, but that's beside the point. The point is, I want to share how we just follow processes and do what we know we should do versus letting the candlesticks later dictate to us what our system should look like. Management says manage at 20, manage at 50, etc., etc., etc. I'm going to manage right now. I'm managing right now. Why am I managing right now if I'm saying all of that? Because I did not enter again. If I had entered again, then I wouldn't have touched anything. I wouldn't have done anything to the original position. I'm going, let me just give me a second. Let me trail my stop to exactly where I don't need to trail my stop as a matter of fact, because my limit was triggered in here. On this feed, my stop looks like it exactly. So let me just, I'll put it there anywhere and then show you. 716. Bam. Bam. I'm gonna post it in the in the Discord now for you to see. So again, this is a limit there, and I just trimmed, and yeah, pretty standard M4. So again, this is where most traders mess up again. When this was printing, we expected it to retrace. It's not far-fetched for this to retrace. Don't go trying to chase waterfalls when the market hasn't retraced. After the retracement, sure. But right now, I don't think that's what we should be doing. Just curious question, since we're all here to make money, did anybody hesitate and not take it?
I took this short actually, but I got like half of what I lost on Friday. I just closed it. I'm scared of like trying to give back what I've made again. So
That's fine. That's fine. This is
yeah.
from Friday makes money cut. That's logical.
I didn't get in yet because I missed the initial entry.
Wah, wah, wah.
I didn't take it.
No, I'd stepped away from my tablet, and when I got back, it's gone. No, but no, I'm cool. If it comes back, it comes back. If it doesn't, then there's always tomorrow.
I didn't take it because you said all-time highs, and when I looked at the all-time highs, it looked like it formed on the 31st of July, and I was still waiting for it to hit that, and I didn't take an entry.
Wait a minute. Okay, just making sure I'm not. This is the all-time highs, right?
Yeah.
So the high
I
on
think
this
on the futures we didn't hit it yet.
Good Lord. Good Lord. Again, I don't have the answer to that eternal problem. All I can say is, guys, if we've been doing this, assuming that you've been around for the last 2 or 3 years, then you have seen how we use CFD feed, analyze it, find our levels, and then some of you still execute on the futures feed, and it plays out beautiful.
Gotcha.
So at some point you have to decide, I can't stay on the fence about this forever.
Yeah, I was going to take in. I trusted the analysis, but since it was August, I just was thinking it might have pushed higher. Like for some reason, I just.
Oh, and that makes sense. That makes sense. That makes sense. Again, don't think I'm, oh my God, yes, 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 I got 50 points. No, I took this fully accepting if anything happens and it trades higher, I'm fine with that. But
Yeah.
I don't want to have myself. Is this a CSD? Is this a CSD? Oh my God, it didn't trade through the down, the up candle is low, it's pushing higher. Do something. I don't want that in this environment. And we all do that. We all micromanage the analysis. So process
Yeah, I'm gonna.
yesterday said that. Oh, go ahead.
I was just saying I'm gonna wait for the pullback to get in and then take it.
Yeah. I want to also see how logical the pullback. I mean, despite anticipating it, just look at the mile markers around where it's happening and how this did not retrace as high as we'd wanted to. So now this is coming, and the expectation is that it should kind of dig into here. What stops me expecting this is if we close below this green candle open again. Not trade below the low and I buy the next candle. And then anything like that. Or trade below the low and I sell the next candle. Close below this candle's open. Then it wicks up and then it goes. But this is as far up as I think our logical retracement should be because the FEG is there. We could slap Confluence on 832 and say that we have 832 here and it trades down, bodies versus wick, eternal debates. We're not trying to do that. We're not trying to do any of that. Process is
And we get that
only.
retracement at the open.
Which one?
Back
This one?
to yeah.
Oh, this is
No,
the high.
at equities open. I'm sorry.
Oh yeah, equities open volatility is expected. Naturally. I'm going to hang around until about should I hang around? That's a good question. Should I hang around? Hanging around is automatically going to have me thinking stock or scaling. And as fun as that is, I really don't want to stock or scaling. I want to just leave this be, set an alert, and yeah. I feel much more comfortable with a scaling after we've dealt with this era. So if it does this and then pull back maybe like 10-ish, 10 a.m. thereabout, anywhere between that, I feel comfortable going looking for scaling. But before this is taken, it's elevated. It's too much risk. Not in the sense that, oh my God, it's scary. It's more of we know what the purge and revert setup looks like. We are fortunate enough to be in before all of that happens because we're understanding the process. But it does not mean if you don't get this, then your confidence about entering here should skyrocket. In my humble opinion, I think a new M4 candle, like it is open. Just gonna put this here. Should be on the call to about that, so we'll see. So now this is the thing that would kill most traders. You see, the moment this wicks here, everybody starts thinking it's a sell, it's a sell, it's a sell. That meme, it's a sell, it's a sell. You see that meme, and then it rallies anyway. I'm thinking this is gonna be one of those instances where it trades to the open price of this up candle, and you think that pullback is a short, but that pullback goes all the way to here, and you get scared out, and then it moves afterwards. So for all intents and purposes, I would not sell this candle at all because I think wicking this open price means it wants to retrace now. Closing below the open price means I can play the next candle. But you leave that alone. So, let me see if Ash got it.
Good morning.
Hey, I know that voice. What's good?
That's the some of us need sleep to live voice.
What's it? I had an opportunity to make a joke and I missed it. Kung Fu Panda. What did the tiger survive on? The dew and some leaf and blah 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 blah. In my head, it was a joke.
Yeah, that's one of the great epics of wisdom in that movie series.
Yeah, I like how they weave all that into quote unquote children's movies. Like kids are going to get it.
It's for the dads.
Amen. I agree.
Panda being the dad.
In a while since the only thing I'm waiting for now in terms of that field is Solo Leveling Season 3.
Kish, another fear is that, I mean, since I'm on futures, is that I mean the runner is at 50 points, and if it comes higher and higher and higher, do I wait for him to take all the BE, or do I see, okay, 30 points, I'm cutting and walk
I
away?
mean, let's be frank about that, all right? We could cut all runners in the
Right
call
now.
and everybody has a good day.
True.
And nobody is upset. So it's tough. It's a tough question to answer. But for the sake of we're here to make money not look cool, I would say don't give your profit back.
Okay.
Don't give your profit back. 50 points is 50 points. 50 points is 50 points. And because I'm expecting this to be a little bit unfriendly inside here.
Yeah, I'll see what 825 to 828 does.
Okay. 820 now should likely kick in volatility. So
Hey,
let's
Kish,
watch.
can you hear me?
I can.
I was gonna add, if say, one partials and he has a runner, and he has the mindset that it's okay if it hits him at BE, and afterwards, obviously, let's say it runs a bit more and he has a certain target. Is it from, I don't know, mental weakness to have the fear of now it hitting BE and sticking to the original idea, or
So here's the thing about that question that makes it not a one size fits all scenario. Last week, Friday, we took losses. All right. I'm assuming any loss I take on the call, you take the same thing too. So last week we took losses. So he took the same losses as me. Instead of trying to get it all back in one trade or one big trade, we stick to get half back, then the next half, then we'll go profit, then we're good. So based on what he's shared so far, I think he's recovered all the losses on Friday and he's knowing a little bit of profit for this week. What we don't want to do is erode all that effort just because we need something else. Think about these two scenarios. Getting enough today to recover the losses plus a little bit of profit, and then they coming tomorrow with a fresh new approach, all is well. Having the opportunity to mitigate with a little bit of losses, with a little bit of profit, but choosing to hold and it retraces deep. To mitigate that, again, try to think rules versus process. Is it rule-based to trim when we're expanding below this? Yes. Is it process-based to trim when it's going below here? Yes. Is it rules or process to wait for this to retrace before cutting? It's not rules, it's more process. The process is I expect a retracement. So what am I going to do either before or after that retracement? Don't think about it too much about the outcome of the trade. Think about it from the standpoint of what am I doing in this instance that I can repeat for my trades going forward without thinking that, I'm micromanaging. What I like to do is I like that 50-point marker always. There's no argument that anybody could bring forth that says you got 50 points, you're such a loser. Okay. 250 points a week, 1,000 points a month. It's just crying all day, just crying. No, how about getting 50 points every day, but because 100 sounds better, some days you walk away with 30. You still end the week good, or you still end the month good. But that better version of yourself will always haunt you. You could have done so much better had you just stick to the process. And that mindset only comes from people who recover losses like this. You lose $10,000. You come at the first day, make 2,000, 2,000, 3,000, 2,000. After about 2 weeks, you're done. But how many persons are going to lose 10,000 in one day and then try to make it back the next day? So I asked, I think it was Smokey, I asked this, what's your average winning day? Because this is how you plan. This is how you plan so you don't overthink. If your average winning day is $2,000, and then on days when you do really, really well, you're scaling 4 or 5. If you lose 10K in one day, right? Just saying, if you lose 10K in one day, the first thing is to say to yourself, it's going to take me at least a week to get this back. So the goal is on Friday. If you're starting Monday, the goal is on Friday. I want to be able to say I've mitigated at least 80% of this loss. That's a win. If you cover 80% of your loss after a bad day in 1 week, that's a win. But it's how you go about doing that. You're in a trade, first day, I'm getting my average winner done. Don't even try to think about it. Don't even think about analysis. Done. Get the reps in. Just get the reps in. Next day, same thing, same thing, same thing. Maybe one of those days you get a big winner. Get it, cut. If you have to use good judgment in some cases and say that if let's say you usually put in 20 contracts on, and a good day is 20 contracts at 30 points. Okay. What if you usually manage 15 out at 30 and then watch that runner, and if it's pulling back, you just cut it and that's it? What if that after that initial 15, it just keeps going? It just keeps going. You're not going to sit there with it running and saying, yes, 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 keep going, keep going, keep going. You're going to manage accordingly to make sure you at least get that average win. And then just continue doing that. Stop planning short term. You trade short term, plan long term. I'm going to get this all back in a week, in 2 weeks. How are you going to do that? I'm going to go in, I'm going to take 20 points and walk. 20 points and walk. 20 points and walk. Or 30 points and walk, or whatever. Just, you know what that number is. Just get the reps in. What you learn from getting the reps in, you don't have to be in the markets from 8 a.m. to end of the day. I'm not. If this was not a call, I'd be done already. If this was not a call, if I'm being honest, I would have entered more aggressively here. But that's something I can mitigate should it not play out. So on these calls, I'm not trying to demonstrate any type of ninja skills or anything like that. That doesn't do anything for you. The whole point is help you navigate August. Rules. Rules. But yeah. Very, very uneventful since it ran here. And I'm thinking it's because we haven't retraced. So this is opening the door for this to pull back a little bit deeper. So now I'm losing interest in the trade. So I am going to trim again. I'm not going to trim 80% this time. A little bit lenient with trims like that. Just so that I can have some skin in the game. Here it comes. Equity is open. Likely retracement, at least here. Unless we're fortunate and it just dies. But no, I have no emotion. I'm not thinking I'm giving my profit back. I'm not thinking, what if it takes me out? I'm not thinking anything like that. I've managed enough to not.
Time to do the rain dance.
Yeah, to not fear anything here. See what's going on in the chat. All right, nice. Lots of charts. Lovely cakes. You just sold 20 points from highs. I bought that 725 candle. 725 candle. Somebody in here is on drugs. Love it. 832 for me. Somebody bought 832. I mean, that's cute. I saw it. It was cute. I would have toyed around it too. So I'm mad at that. Moment of truth is coming. Place your bets, guys. What do you think equities open is going to spike to? Higher or lower? Higher or lower?
I've moved my stop, like trailed it to here.
I mean, that's like professional management. Absolute professional. 20 seconds to go. Let me check on Ash.
What did I miss?
Nothing yet. Beautiful, beautiful. Beautiful. He got in. Here it comes.
All out.
Beautiful, beautiful. That's a win. Coxal. You guys know Coxal Baba? I think, or Coxal. I don't know if I'm Bruce friend his name. The short guy. Something about the gifs with him are eternally funny. To me, at least. Pam, 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 pam. What is this? What is it doing? Let me just see what this looks like here. Up to the M1 real quickly. That was a load of big wick. Take this line off. So this is like a mile marker now. You want to see closes here to sustain, move lower. If it closes there, that down candle should not be CSD. Ideally, you want the FPG here. Anytime there's a level and you have a stop run, you ideally want big pushes through that level. When you want continuation, of course, and then you could reason out what the reversals look like. So I'm looking to see it close through here. And if it does that, it's going to open the expectation that we're going to run lower, leave this, and then come back for it. Three, two, one. There's that close. So now you don't want to see this candle get a CSD. You want it to stay heavy here. And push through, put a FPG there. if you don't get an FEG, because I know some people only see FEG if it happens in 3 candles. If you don't get an FEG, you're looking for the first candle high that prints below there. And then you're going to frame the FEG using this low and the first candle high that prints there. But again, first thing is you don't want them to CSD this candle. That's not bearish. So maybe one more wick up. Some spunk into it. A little slow. And then close heavy. Right, there's that one more wick up. Bang, bang, bang. Bang, 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 bang. Oh, this really wants to move in. It's completing the retracement now. She really wanna move.
Imagine if they make any all-time high on the futures now in full.
Negative. No, don't say that. Don't say that. Say this is a retracement. All right, retracement looks like it is underway. So as far as that's as far up as I think it should reach for, given the fact that that's the FEG. Now that we've hit the top, move away. Show us that you want to move away. This is where the balls of steel says you can sell. Balls of steel because the candle hasn't closed.
That's for the young guys.
That deep retracement would have probably had you stressing no, right, Mon?
Yeah, 100%.
Indeed, indeed. Don't worry. So M1.
Well, I would have been BE'd if I
Yeah.
didn't take that runner off.
Yeah. I mean, M4 still looks good for where it is. Do this through the M4 so we don't get caught up in the M1 shenanigans. Now, this looks like a retracement. Hit the level retracement. So now, textbook says first things first. You don't want them closing above that to show that it's expanding higher. So M1 intrafractals and take this back below here. And then, as I said, first candle high on M4 below that level. Use that low and that high for your FEG. And then that is your mile marker for directions. 836. At least one person should be in. So stop trying to hide it. As if you're not hoping it tanks no. I see you. You're gonna wait for it to be in some decent profit before you send the screenshot. Okay, it's okay.
Talking about me.
We trade, right? We're real traders. We understand how traders think. We understand how what the stuff are that you go through.
Would we look for this as a mile marker, since this could be a bullish OV?
What is this? Not necessarily. If it's a bullish order block, then this is internal, and you'd be expecting external run and then mitigation at that level.
Okay.
This has already been run. So you're less interested in this down candle. All right, let me not say that. You're interested in this candle if they make a new high. If they make a new high, this down candle becomes significant. If they don't make a new high, they close below the FEG here first. This is not an internal run. You know, as much as people like to think that this is not an internal run. This is just a retracement.
What is the difference between you saying internal run versus a retracement? Is it a retracement an internal run?
Well, you kind of caught me there. Here's the thing. Here's how I look at it. Don't justify it after the fact. Do you see something this should reach for in here before going lower in terms of internal liquidity?
Well, just failure swings, if to be honest, these.
No, that's you explaining. If it retraces, these are areas it can retrace to. Slight difference. The difference is there is nothing here for this to reach for in terms of internal liquidity, for them to grab and build a order block in here.
Apart from that FVG that you marked out.
Yeah, but that's not internal liquidity. If we had to gun to our heads and we had to say where is internal liquidity, it would be these highs. But it's not at these highs. So this cannot be an internal run. It's a retracement. Yes, 100%. 100% retracement. But we expected that since here. Pulling back inside the range is expected. So if you're reading left to right, while we were here, anticipating close below this and then retracement, we weren't thinking about it as close below it here and then reach for internal liquidity, right? So
yeah,
this is where that becomes a little bit important for everybody. If this is the start time for something to happen, and when you're here, you can clearly see on the left what it should reach for. You cannot then say the process that starts here and look left will reference this high here because it was printed. That's how we lose sight of what a key level is. When this was printing, the only thing we were interested in is a close below the FEG, a pop back in the FEG, and then lower prices. So as we continue to move forward, we are still interested in a pop back to the FEG and then lower. If anything prints after that, what it does is help you to understand how liquidity is engineered in line with a process. So they should run here. Somebody short there, putting their stops at those highs. Those are the engineered liquidity that gets taken when this is being run. But it's not. We're now here. So this must be, no, it's a good way to explain that this is an example of where internal liquidity could be, but I'm not looking at the run itself to be a run on internal liquidity. A little bit crazy if you ask me, but rules keep us in check. We read left to right. Morning. Yeah, look up someone. So now that we're here, we can't start justifying, oh, this is a level, this is a, just because it's there. Moving goalposts. So what happens another time when the market prints and there's an actual, like this drawing here is an example of where internal liquidity would be. All right. You get a push, it pulls back internal, there we go, blah, blah, blah. What if it doesn't have this and it's just one drop? Then this part here is not going for internal liquidity. It's retracing for inefficiencies inside here. Or something on the left side of the curve. That is why when this is printing over here, we could cycle through time frames for this just to kind of hammer it home. When you're cycling through time frames and you look at what's printing here, and it holds no bearing to what the market should or should have been reaching for, you don't use this to justify direction. Say it again. If we know that this market is reaching for this FEG, you can't use this to justify direction. Oh, look at this. No, you have to look at what it's reaching for. This is essentially the same as saying that's a key level. What's the delivery like at your key level? That's how you justify. So, completeness sake, if you go back to M1, this black line is identifying one specific candle, 832 right there. FEG there, close below, lower prices, reaches for that low. Once it's done that, it should pull back. It just should. If it pulls back, you're focused here. If that happens and it stops there, then that's where your P-Day rates for lower prices are going to print. But what happens when it does, if it, like in this case, when it does not stop there? You don't go justifying, oh, up candle CSD. You don't do that. This is not how you frame direction. This is how you get stopped, as a matter of fact. When there's no logic as to why this is printing here. Oh, it's an up candle and we're retracing, so up candle and CSD must be a short. So bearish order blocks are made of. But this is essentially saying a bearish order block in the middle of nowhere should work. But yeah, for completeness sake, I think this has done everything that it needs to. You know, timing is beautiful. Wink, wink. It's been a while since I said wink, wink. Timing is beautiful. All the way back up to whatever it wants to reach for here. This is not, oh my God, it's bearish. Look how big the candle is. This closing below the FVG, then we could reclaim the level. And then again, should you not be comfortable with this, you will be thinking about closing back below this black line and the first candle high that prints below it. If you're Mac, you're thinking this is a bullish order block, so you're going to go long, and then you're going to get cooked. Get in. Get in, my friend Mac. Don't come from my head.
Hello, Kish.
Hi, is that I know.
Daniel.
No, it's the mentor of all mentors.
He has so many names. Like I'm not sure what names they're addressing by.
Ben.
Here we go.
Oh, sorry, Benson.
No problem.
Ben was my first guest, to be honest. But then you go by Olamite.
Yes, that's do not expose me.
Fair enough. What's going on, man?
Just
I'm
don't
good.
expose yourself.
I was just I wanted to ask if, just because why not, if you can spare some time later today or maybe during this week for me.
Sure.
Would you write me?
Sure.
Kish, thank you.
Yeah. I think there's like two or three persons before that I'm planning on having a call with this week. As a matter of fact, I think the rest of this delivery is pretty easy for everybody. Close below this FEG is what you want to see. If it doesn't, you don't go overthinking it. If it does and it retraces,
I mean,
you don't want to get them to get back above here, and then you could
Kish,
trade
if
where it
you
happens
are
after.
if you are using David's point, fail expansion key levels right here,
Negative.
right?
Negative.
No?
Nope. Look again.
I mean, as you said, we're just trying to justify why it turned here, but
Oh, yeah, sure. Okay. If you're trying to justify why it turned here and you're looking at this as the failed expansion, with this week,
yeah,
what does that say about lower time frame this week?
there's an order block there.
M1 order block could be here, right? So let's,
Yeah.
for completeness sake, I'll do that, and then I'll leave you guys to M1 order block. That, sure, I can vibe with that being an idea. A lot of work, but
Okay.
yeah, I can vibe with that. You went short again?
No.
Oh, okay.
It's a bad habit.
I have to check. Like how the FPGs being resistance on M1. Beautiful stuff. Go take that low, make daddy proud. But all in all, guys, pretty straightforward day, pretty easy day. 50 points is 50 points. Focus on 720 open. That's where the revert needs to take place. All this retracement back inside here is screaming that this should, by all accounts, reach here. By all accounts, it should reach here. But then, yeah, you can handle that on your own. So, thank you guys for coming to my TED Talk. But somebody sent a chart. The color looks very voodoo-like. Why am I not surprised?
Can we go to the end of day because we have Tuesday high of the week for swing trading.
Are we in options expiry?
Wait, I'm a tad bit confusion. I'm confusion. When you said go to the end of the day,
He's in the future.
I know Tuesday high of the week. I get that. Like we talked about that yesterday. Tuesday being the high of the week and then lower prices. So if you're saying, let me share my next screen. Here. NASDAQ. Here. Are you seeing my next screen? What are you seeing? Daily chart. You seeing the daily charts?
Yes.
Okay. Tuesday high of the week. Monday low. First drawn. First drawn liquidity should be Monday's low. So let me just allow me to adjust here. That's the first drawn liquidity. Whether we're bullish or bearish, this is the first drawn liquidity. After that, then we're looking at this. And then after that, we're looking at this. In my humble opinion.
Thank you,
Humble opinion. For the Bitcoin traders, I think we talked about it yesterday. This is the order block candidate. We want to see them fail here. This will do what we want. So Bitcoin lower is nice. For the oil traders, we haven't gotten that CSD yet. So yeah. And then gold is get out of my face. Get out of my face, gold. But yeah, all in all, okay, and here. So good day. I'm going to check what I have planned for today, and if I am free in the next 30 minutes, I'm gonna hit up Ben and have that call. Okay, Ben?
Big Ben from Fantastic Four.
Okay, yes. Computer issues. Okay, yes. Amazing.
Okay.
Thank you.
China orders coming to help. So Voodoo, whatever they print right now, to me, is smoke and mirrors. So I think I said that like 2 weeks ago. I don't know what they're going to print to justify taking NASDAQ that low to that level just pointed to, but something is going to come. Technical say that's what we should reach for, but markets don't just fall overnight. So something needs to print to say this is not happening. We're not happy. And then it falls. Like there's nothing says that this should reach for here either besides technicals. So something is going to print to get you there. So it works. But all in all, again, everybody should be comfortable with today. If you took losses last week, unless you're micromanaging a risk, you should be floating and comfortable. So another great opportunity to demonstrate consistency is not about winning every day. It's about the little things that you do that keep you in the green. So with that being said, ladies and gentlemen, it's been fun. Thanks for coming to my TED Talk.
Bless all.
Same time, same place tomorrow. Don't go giving your money back, of course.
Thank you, Fish.
My pleasure.
Thanks, Kish.
See you in the chat.
All right, thanks, Kish.
Cool.
Respect, big one.
My pleasure. Lots of love.